All right, I'm on. Welcome to the Golden Experience. I have T.Todd Simon from Legacy Home Loans and my boy Chris Shaw. Now, Legacy,
What up? What
huh?
up?
Yeah, Legacy Home Loans. We all heard that name. I saw them on a TikTok thing. I was like, oh, they doing something like the Bank of America was doing. I said, well, and they black owned. I'm finna mess with that.
No doubt.
And the sister was like, yo, this is that, and the third, they doing this, and ran it down. And I said, now let me call them. Went on the website, let me call. Boom, boom, boom. Got in contact. It was like, with a brother, he was like, yo, I'm not with them, but let me put you to somebody that's interconnected. And here we are, Brother Ty. Gotten connected, Legacy Home Loans, man. Tell us
What's
about
going on,
you,
my brother?
a little bit about you, and a little bit about Legacy Home Loans, man. The history.
Absolutely, bro. Again, my name is T.Todd Simon. I'm the regional manager with Legacy Home Loans. Um, been in the industry this month is 21 years in banking and finance in some capacity. I'm a Navy veteran, father, husband, and really my singular focus is I'm a financing strategist, whether it comes to residential or commercial lending on some type of level. I have a lot of investment clients that do multifamily and investment properties and things like that. So, as a small business banker at Chase, understood how to leverage equity in your property to either start a new business, send your kids to college, uh, various things that you can use real estate to then enhance your personal and your business life. So that's really my singular focus and my overall experience as far as in the industry. Legacy Home Loans, man, largest black-owned mortgage company, man, founded by Mr. Ben Slayton, who was our CEO. He was actually the first black realtor in America, man. So who else better to be the CEO and founder of a company than somebody who has documented history of overcoming adversity and challenges in our community? Um, Being a trailblazer on various fronts, and also being a realtor. Right, when we get into the real estate piece of it, he has the background of being a realtor, so he understands what realtors need when it comes to communication, timeliness,
Mm-hmm.
closing on time, actually closing the damn deal that you get the pre-approval for. Right,
Right, right.
those things are super important. And so we got, our CEO understands that because he's set in the seat for realtors and people on that side of the transaction. So with being the head of our company here at Legacy Home Loans, man, our coach is 100% around accountability, family, black excellence, uh, and delivering a world class experience. We know with black people, we have a certain set of challenges. We have a certain mindset. We got sometimes bad behaviors when it comes to money and finances, right? And that's just because of exposure.
Mm-hmm.
So if we can be on the side where our experiences and our life lessons allow us to properly guide our clients to the finish line, I think that's dope. And then everybody at the company, top to bottom, looks like you and I, bro. So, I can talk to my VP of operations, Miss Shirley Miller, who's a 40, 50-year veteran in the business. I can pick the phone up and talk to her. I can pick the phone up and talk to my underwriters. I can pick the phone up and talk to my team. We're accessible, and we give the real, right? Because sometimes we understand, bro, and I'm pretty sure you can agree with this. Is sometimes when you go into various banking institutions, right?
Mm-hmm.
Various places, you don't get the level of respect and you don't walk away understanding or even feeling empowered that I can accomplish this. And so that's a part of all of our lives is to make sure that our motto is fulfilled in building sustainable wealth through home ownership. And that's really the key, bro.
So let me ask you this, and I apologize to everybody. I'm having a little bit of technical difficulty, so you can't see me. But I'm going to jump into this. What's the difference? Again, you made a point just now, but
Mhm.
why would I go to Legacy versus one of the big banks, B of A,
Mhm.
Chase, or maybe even my credit union? What stands apart with you guys versus
Well,
everybody else?
No doubt, man. That's a fantastic question, Chris. Well, first off, um, you have the ability to have somebody that looks like you that's gonna talk to you for real, right?
Okay.
I'll start there with this because there's a language, there's a various terms and things like that that happen in the finance industry that if it's not explained correctly, you can walk away with no real understanding. You can actually achieve the goal, but if we're talking about building sustainable generational wealth, it's the education piece of what you have to know is important. And so we actually, the way you and I can chop it up, or the way I can talk to a home buyer and help them understand the process is a little bit different than somebody else might be able to, right? And our vested interest, like there's not a lot of companies where their goal is to close the wealth gap. Our goal is to close the wealth gap. Our goal is to build sustainable wealth through home ownership in communities of color. So it's not a subset of business we do. That's the goal.
Mm-hmm.
So why would you not go to a place if the focus, top to bottom of the company, is to help you as a person of color build wealth and get into the house and get the keys at the end of the day, and also make sure that you have the best possible experience, and we can understand some of the dumb things that we do as black people, bro. So, you got to be able to navigate the situation. I'm not saying that there are various people that may work at a credit union or work at the bank or whatever the case may be, because that was my background. That was my start, right? Is in those financial institutions. The one thing that I actually saw though is that when it got past me, it no longer had the same process. So I'll give you an example. If I have a client that I'm talking to, and I've built that relationship, that rapport, and then I'm referring that up to somebody that's in the mortgage or underwriting or whatever, financial plan or whatever the case may be. If I've already helped them understand the situation, then they go to that referral, and that person spends 3 to 5 minutes trying to, just give them a high level overview, and that person then doesn't walk away feeling empowered, then that's a problem.
Mm-hmm.
Mm-hmm.
So that brings me to you guys have a program called Closing the Gap.
100%, bro.
Talk to me about that.
Man, we so super excited about it, man. And I'm gonna kind of take my time. I take the long distance route when I answer questions, John. You know how it go.
Mm-hmm.
One of the things that we're excited about with this Closing the Gap program is the fact that our CEO and our leadership team, we 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 put the work in. So we go deal with the government agencies. We go talk to them. We can sit and look at the data. We analyze the data all the time to understand what led to the problem. And it's always easy to find out what the analytics and the data says and suggests about what's happening when it comes to socioeconomic disparities between black and brown people, people of color, whatever the case may be, right? So we can always talk about the data. We can always talk about the problem. I think we do too much about that and more and less about finding a solution.
That's what
So that's
that's.
what the Closing the Gap program is about. It's about finding and developing a solution to the problem that we see. We know that there's some differences in our community, right? So if we can work with various government agencies and create something that gives um, an opportunity to a home buyer that otherwise may not have it. So, with a couple of high level points with the Closing the Gap, right? It's 1% down, right? It only requires a 620 minimum credit score. We give you an appraisal credit, which basically makes your appraisal free. We give you a free home warranty. We have pre and post closing home ownership counseling, right, at no cost. And then in some cases, if we have an additional lender credit that we can do to help you offset your closing costs, we do that as well. So the thing is about putting the process and the policies in place to really help our people. So it's starting out in 6 target markets, right? Those target markets are, of course, Detroit, right? Detroit, Chicago, Baltimore, Philadelphia, Atlanta, and Memphis, Tennessee. The goal with those 6 cities are we're dealing in places that have a population of 51% or more of black people in that area. And also looking at the amount of people who rent versus own, right? Because essentially, one of the bigger purchases that you're going to have in your monthly expenses is some type of shelter. So
Mm-hmm.
whether you're renting or you owning, you're still paying that money anyway. And in most cases, if you're able to understand how to leverage the money that you're already paying
Mm-hmm.
and make that ownership, now it's not too much of a strain on your budget because you're paying rent anyway. You're making
Right.
somebody else rich.
Right.
So build your own equity, build your own ownership, and then when we're talking about pre and post closing counseling, right? It's one thing to get the asset. It's a whole other thing to understand how to keep it.
Mm-hmm.
Let's slow down even a little further. I want people to
For sure.
understand and know what you're getting here. And we're gonna go through each one of these bullet points. We're gonna take a little meat off the bone.
Let's do it, dog.
1% down. 1% down. Let's talk about that right from the
Mm-hmm.
top.
Okay.
Now, normally, what ranges will we be looking at a regular institution versus 1% down? Again, I cannot stress enough, people. 1% down. That changes your whole outlook on being able to purchase a house because most of us have issues with coming up with that down
Then
payment
that's
and
my.
so on and so
Yeah.
forth. So we're gonna hit on all this. So let's talk about that for a minute.
Big man. That's a big point, right? So let's break it down this way. All right. So when you talk about purchasing a home, there's only three vehicles that you're gonna use to get it, right? And it's a conventional loan, right?
Mm-hmm.
Now let's go the other way. So let's go U.S. The type of loans that give you 0% minimum investment, right?
Okay.
So that's like USDA and that's VA, right? Now, what happens with USDA and VA loans, it does not mean that you're not going to bring any money out of pocket. You just don't have a minimum investment. So if you're able to secure closing costs, things like that from the seller, that limits your out-of-pocket expense and your exposure.
Mm-hmm.
But those are, with USDA, you got to be in a rural area. With VA, you would have had to serve your country and be a veteran in order to
Mm-hmm.
have access to that. Now, the other two vehicles are an FHA loan and a conventional loan. With an FHA loan, the minimum investment is 3.5% of the loan amount. So, quick math: if it's $100,000 purchase price, that means that your minimum investment is what, 3,500,
Mm-hmm.
right? So
Right.
if you don't have uh, if you're not able to secure closing costs from the seller and things of that nature, that means that on top of your 3.5%, you got to pay your closing costs and that other kind of
Mm-hmm.
stuff, like the attorney fees and stuff, right? That comes into a loan.
Mm-hmm.
The other option is what's called a conventional loan. That loan is a little more conservative, right? Um, the minimum on some conventional loans is 3%. So you can go 3%, typically 5%. Normally, the rates that you see advertised is somebody putting a 20% down payment with a 720 credit score. So if you walk in the bank and you see the rates posted on the wall, I'm telling you because I put them up myself, right?
Mm-hmm.
Right.
The fine print that's on that is saying this interest rate is based off a 720 or
Mm-hmm.
750 credit score,
Mm-hmm.
20% down, right? And a debt to income ratio of 42, 43% or lower.
Mm.
So you can walk in your financial institution or your credit union and it look good on the wall where it might say, I don't know, 5%, 5.5%, whatever it is. Walk up on it and read the fine print at the bottom. And if you don't fit that, if you're not fitting into that particular category, then it's a wrap.
Yeah.
And it's
So,
not false advertising. It's
mm,
telling you in the fine print exactly what you got to do to get that particular thing. So now let's break down the actual 1% that you were asking about. So the way that the closing the gap works is a conventional loan, right? It's a conventional loan. It's a
Okay.
3% down conventional loan. That's the platform, right?
wow.
So
Convention.
right, it's a conventional loan. So when you're thinking about the past 2 years when everybody said, I don't want FHA,
Yeah.
we're taking FHA off, of FHA is the worst thing since sliced bread, all that. Um, we figured out a way with the conventional platform to take that excuse off the table,
Mm-hmm.
right? So 3% down, right? 1% is coming from the government. 1% is coming from legacy home loans. Now the other 1% is your responsibility.
Gotcha.
That's how you get to the 1% down.
Gotcha.
Can't beat that. You got to be invested some way, some shape, or form,
Yeah.
and that's the minimum amount to be invested with.
Mm-hmm.
Right.
That
Because you
makes
put
it.
the money down. It's still 3%. It's still a loan, right?
Yeah.
It's not something that is brand new. It's actually called a special purpose credit program, right? And these have been around for years, but a lot of times nobody is taking the additional step to actually use that particular let's say loophole in order to make something like this happen.
Mm-hmm.
So when you're looking at it, it's no different than if you walked into a Chase or somewhere else and you were trying to actually just get a regular conventional loan. You
Mm-hmm.
still got to qualify for it, but it's 3% down, and you got to have that 3%. What happens with the closing the gap program is we're splitting that additional 2% with the government. So we giving you money. We giving you 1% in order, and the government is actually matching the other 1%. So that way you have that minimum only 1%
Mm-hmm.
out of pocket to get that done. So back if we take that same let's say that same 3.5% that we talked about, $100,000 purchase price. In this particular case, versus $3,000 you got to bring as a minimum, talking a grand,
So you're saving thousands of dollars there,
Mm-hmm.
right?
just right off of the top.
Okay. Now let's jump into an appraisal. Free
Mm-hmm.
appraisal. Now we all know appraisals can range anywhere from $250 to $500. If I'm incorrect, please correct me. Is that true?
Yes, that's true. That's true.
Okay. So
Can
so
go a
we
little
got
bit longer. It can go a little bit higher too if you have to have a, you know, like a final inspection or something like that. That can sometimes happen in the process. So that cost could range from 500 all the way up to 750, depending on the type of property that you buy as well.
Mm-hmm.
okay. So I saved thousands of dollars with my 1% down. I'm
Mm-hmm.
getting a free appraisal. I'm saving hundreds of dollars there.
Mm-hmm.
Okay. Now I bought my house and I'm a little nervous and we
Mm-hmm.
don't know this is our first time experience. So if I'm doing that,
Right.
okay, you know what? It's in good faith that I should get a home warranty, and you guys are providing that. What kind of peace of mind does that provide?
Man, listen, a home warranty is probably one of the bigger things that is not really talked about when you're purchasing a home,
Mm-hmm.
and especially that first year, right? Because you're getting in, you're getting settled, you don't know what type of habits the person had prior to living in that property before you got it. So having a home warranty is important because it covers, you know, it covers vast, pretty much everything that can go wrong at the house. So if it's a hot water heater, the AC unit goes out, dishwasher breakdown, something like that, they can basically come in and do it and fix it. And if it can't be fixed, then they'll replace it.
You can't beat that. And now here's what I think is really, really important.
Hmm.
We down to the pre and yet even more important, the post closing purchase counseling. Let's talk
Yes,
about
sir.
that a little bit.
Man, listen, man. There are certain things that are just so important when you're talking about pre pre you know counseling before you even get to the house. There's certain things that you have to understand as far as budgeting, um, yard maintenance, right? Um, I don't know about y'all, but I'm pretty sure in the D it's the same way it is in the Carolinas in a lot of cases where, you know, uh, I grew up seeing broke down Cadillacs in the yard, next door to me. I don't know whether it's like that in the D or not, but
For
I'm
sure.
pretty sure it is,
Mm-hmm.
right? So, you know, it bricks on the car, the car sitting on bricks, and guy been fixing the Cadillac for 5 years, live it every day. You know,
Right,
right? What
right.
what does that do for your What does that do for your property value though?
Brings it down.
If you on if you're on the street and it got trash in the yard, people ain't cutting their grass right across the street, and then next door to you, you got a broke down Cadillac, you know, right next door, and on the other side, my man got just broke down cars in the yard, all in the backyard that he done pulled in or hauled in from somewhere, and it's
You tell
trash,
them
selling the copper. You know how we do as black people, dog. You know what it is.
Uh-huh.
So pre and post closing lets you know, like, hey, these are the type of things that you can do on your daily process that can help bring curb appeal, bring additional equity. Some of the responsibilities that sometimes we don't think about, because if you're coming from renting, you used to being able to pick the phone up and call the office, like, yo, I got a leak in my sink. Somebody, let me get the maintenance guy over here to fix it. It don't work like that. Once you own it, you the maintenance person. So
Mhm.
you got to know how to connect those dots and get in touch with people that can come out and do that work. So it's really about understanding the subtle nuances of being a homeowner, especially if you're coming from renting, because you're used to just picking the phone up and calling somebody. Now, if we're talking about post closing, that's where the real rubber meets the road, is because after you get the asset, now what are some of the behaviors that you might have had prior to that can stop you from keeping it? And that's all that is. Just having some at least opening the dialogue
Mhm.
around some of the things like budgeting, and not going to a check cashing spot, something like that.
Yeah.
Which we do. So
Yeah.
if we just keep it real, like, I mean, that those are things that are important. A lot of times you may not get the full answer in that session, but at least if it planted a seed in your mind about some things that I need to know, then it takes the excuse out of the way about saying I don't know.
Mhm.
And
That's
you have, contact number, email addresses, things like that, resources that you can actually call if you get in trouble. And if at least if, I don't know about you, but if something was planted in my mind, I may not remember everything verbatim, but it will jog my memory on something, or at least an email address or phone number I can call to get more info, to get what it is that I need to have done to help me keep my asset.
Mhm.
Well, let me ask you this question.
Mm-hmm.
Okay, so we heard about Bank of America and
Mm.
their program. How do you guys? Oh, I heard good things, and they're doing stuff in the community and this and that. Let's do apples for oranges comparison with Bank of America and Legacy. Let's talk about
All right. First off, man, I wanna actually, show love to Bank of America, bro. I worked there, for a long time. I was a small business bank out there for a long time, man. So, great company to work for. Um, they do have things that they're a forward thinking company when you're talking about versus other banks. I do like Bank of America in that sense. Now, when we're talking about this program specifically, um, the caveats of most programs that have to do with some type of down payment assistance or community reinvestment, it has everything to do with the dollars going to a specific area. Like, you have to buy in that area in order to actually get the benefit,
Mhm.
right? So if it's about pushing the resources into a particular area of color that might be undervalued, underserved, then it's about going to buy in that area in order to be able to take advantage. One of the biggest things with our closing the gap program is it's not about where you're going to live, it's about where you reside now. So it's not about pushing you into a particular area. It's about helping the people that are the residents of that area to have freedom to either buy in that area where you are now, or, like most people, you might want to take a step up and say, I want to get my kids into a different school system. I want to have a different way of life. I want a different level of peace in my life at this point in time. So the program is about where you live. So if you live in Detroit, you can actually qualify for this situation and then move out to the suburbs or somewhere, or move over to Ohio or something like that,
Mhm.
where the cost of living is a little bit cheaper, but it's 45 minutes outside the city, right? Something like that.
Mm-hmm.
It gives you the freedom to then be able to figure out a way to get the most bang for your buck. Um, sometimes if you go to the outer city, you might find something that that's 2, 3, 400,000, but it gives you the square footage, it give you the yard, it give you that stuff that you never even knew that you had the access to get. Right? It's not about having to actually buy in a particular area. It's about helping the residents of those areas to be able to qualify with the least amount of money out of pocket, stop renting, and start building sustainable wealth. That's what this is about. That's the difference in a
So,
nutshell.
in other words, you're not pigeonholed.
Not at all, bro.
Mm-hmm.
Because
Not at
everybody, I might not want to live in the city. Maybe my kids go to school, in the surrounding suburbs. Maybe
all.
it's
Correct.
close to my job.
Right.
So I don't have to live in the city. I have options.
Yeah,
Absolutely.
and let me ask this about because Bank of America have the program where they're not necessarily based on credit score, but based on you paying your bills on time. I
Hmm.
thought was a unique. I mean, is that how does that work, bro? I mean, is that
Yeah, I think it's
real? Let's
whack.
let's keep it
Uh,
real. Let's keep it real. Is it
we
real,
keep
man?
we gonna keep it real.
Yeah, we keeping it real on this show.
Okay. Yeah, I think that's whack. Actually. Okay. So let me see. All right. So when you're talking about not using somebody's credit score to actually help them qualify, the way that happens is you're still using what we call non-traditional trade lines. It's non-traditional. So that means I got to look into how you pay your car insurance. I got to look at how you pay your cell phone bill. I got to look at how you pay your rent, right? There's going to be something that has to establish some level of payment history
Mm-hmm.
because I can't just do a loan where you haven't paid anything on time.
Mm-hmm.
So it's going to tap into some type of payment history. And if you carry outstanding balances, if you have past due payments on certain things, then guess what? It's going to have a ding against your payment history, even though they're not looking at an actual credit score, right? Let's unpack that part a little bit. If if things get a little tight, we're talking about a recession right now, right? We're in the middle of a recession, and y'all think about this. If it's tight a little bit for me, which one of the bills am I most likely to not pay? My rent, my cell phone bill, my car insurance, uh, something like that. You can pay your rent first, right? You're gonna probably pay your cell phone bill,
Mm-hmm.
but those other sticky bills, you might take a late payment or you might make an arrangement on
Mm-hmm.
that just so you can keep and put grocery on in the refrigerator and keep yourself in the game, keep the lights on.
Mm-hmm.
Those are the things that you looking at in these programs to then say that this is how I'm establishing your payment history. But life happens, and you can then have something that like a late payment or arrangement. Now you got to pass due balance on some of those things. If I go back to pull that as your actual payment history, what is it going to show? It's going to show some inconsistent payments.
Mm-hmm.
So now that just put me in a situation where I can say, hey, you don't qualify because of the criteria. You have some late payments and things like that in here on non-traditional. Whereas if you go off of your credit report, it's not looking at your light bill. It's looking at major things like did I pay my car on time? Did I pay my credit card bills? Did I make these payments? Do I have decent enough payment history on here that's documented? And it's not coming down to some of the things that can be uh, secondary things that you might pay or make an arrangement on. You're going to pretty much have pretty decent payment history on your car, things of that nature. So it to me, and this is my honest opinion. This isn't fact. This is just my opinion. It gives way to uh, basically say this is how you don't qualify.
So it sounds like it's kind of like, hey, we tried to get these people in this area qualified, but they just didn't make it, and we gave a good effort.
Yeah,
That's what it sounds. It
Bill,
sound like some bullshit. Yeah, okay, there you
yeah,
go.
basically, bro. To me,
uh,
now is it going to help some people? Of course it will. Of course it will. Is it the opportunity to not have to maybe possibly get into a situation where you could get a property with a low credit score? Of course, it may work for some. I don't think it will have an effect like that for the masses.
Mm-hmm.
And it also talks about actually putting you. You have to be going to a certain area that is qualified for that program. So it's I don't want to say that word. It's taking you in a situation where you got to buy in a particular area.
Uh-huh.
You
Okay.
know what I
Okay.
mean?
Let's okay. We said we was gonna keep it 100, right? We're gonna
Let's
keep
do
it.
it, bro.
We're gonna keep it a buck. Now, your average person, to your point, if I'm gonna pay my house, yeah, I'm gonna pay my car, but you start hitting the utility bills, I can stretch that out. My
Mm-hmm.
cell phone bills, I can make arrangements on that. These other bills, you're more prone to you. They give you the room to be able to do this and do that and stretch it out. So
Right.
that's what you're gonna go back and look at and say, oh, you didn't do well. That's not a priority to me.
Right.
My
Right.
kids gotta eat. I gotta have, there's certain things I gotta have. I gotta have gas for the car.
Right.
So when you look at it in hindsight, it's really detrimental because you're more prone to slack in those areas versus getting an eviction notice or having a tow
Mm-hmm.
truck pull up and repo your car.
Right.
Exactly. And if that's the model that I'm going to use to actually help people of color actually get the property, then you're going to have more people that have had to make an arrangement to keep it in the road. So if I'm looking at these things to then go back and do the non-traditional credit and say, okay, this is work, this is work, this is don't, it's going to be some blemishes in that. If you just really just slow down and
Yep.
think about what you have personally done, what I have done, bro, we're in a recession. I
Mm-hmm.
might have did an arrangement last month,
Mm-hmm.
personally.
Man, I
You
don't think
all
I've
gonna pay
ever
that
listen.
time. Come on now.
I didn't have
I'm just saying,
Verizon.
bro.
I didn't have Verizon for 7 years. I don't think I've ever paid that bill on time.
Preach. Preach.
Come
Come on now. You say we're gonna keep it a buck. Let's keep it a buck.
I ain't never
And
paid it on time.
okay, fellas,
It ain't because I ain't had the money. I don't know. I just didn't want to pay the shit.
because they allow you to do that. They're like, I can pay
Right.
something else, but I can do something else. That's
on.
because we're human beings. So when they came out with the program, and
Hmm.
I'm not in the industry, so I can speak.
Uh-huh.
Right? I ain't got to be politically correct. Okay? So when people like us in their room that make those decisions and set up that platform are not saying they don't know. They mean they're not privy to that side of how we survive. You
Yeah.
see, so when we start talking about things of that nature, and we're looking at, oh well, let's do this. Let's say no credit score. Your credit score doesn't matter. That's gonna get them in.
That's gonna get them in
Yeah,
here.
that's gonna get them in. But like you said, when you pull back the veil and unpack the layers and stuff, it's a little bit different.
Yeah, you getting them
Why
geek.
not?
Yeah, you getting them geeked up. Oh, I'm gonna get this money because that's why they was, man. And this is not. And I looked at it, I was
Yeah,
like,
they hype about that. Oh, my credit score, I ain't got to worry about that.
right,
But it's kind of setting you up for failure because
yeah,
guess what? At the end of the day, and like me and Jonathan know, that credit score is everything,
It
right?
is, man.
Let's
It
get
is.
you,
It's
let's
super
get you where
important.
you need to be to get used to paying bills on time, to paying them early, to paying them for that statement date, to getting
Hmm.
that balance down. Let's talk and educate people about that rather than sit you on a house of cards because you already got bad habits. You think
Correct.
you're gonna get this house and your scores are 515, right? You're
Hmm.
still gonna have those bad habits.
right,
Come on,
Very much
people.
so.
Let's talk about it. For real, man.
Very much so.
yeah.
Like you have those type of habits, and if you don't address it, it will be you once again back to your point. It's putting you in a situation where two things. Either you have a harder time even getting the asset. One, two. If you do get it, then you may have some bad habits that put you in a position where you can't sustain it.
Yeah.
Either one, either one of those things don't help our people in the long run. And I'm gonna say something else. We gotta stop looking and asking about the minimum, dude. Like we
Yeah.
come from a history of kings and queens and excellence. Right now, we're trying to find the easiest way to do every damn thing.
Yeah.
I don't want to fix my credit. I don't want to do this. I'm gonna find the easiest way. I don't want to put no skin in the game. Like, man, listen, if we don't change that damn mindset,
Yeah.
we ain't gonna win at all.
Yeah. Facts.
Cause I mean, we sports people.
Mm-hmm.
I ain't walking on the floor trying to figure out how many points, what's the minimum amount of points I need to average to stay on the team. I'm
Yeah.
trying to max out,
Right.
right? And so we take that same mindset that we have in sports and music and entertainment, all of that, and tie that to our credit and what we're trying to do, like to build wealth. Then we'll dominate. We just don't take that same thing over to this side of the table.
Yeah.
Like, think about it. On Saturday morning, you go to any park, Pee Wee football, parents is out there, everybody up, teaching their kids to dominate on that side.
Yeah.
But then they come home to bad habits and
Yeah.
excuses. Come on, man. Like, take that same energy and start trying to figure out the minimum to win. Like, that pisses me off.
I feel you.
I hate when a client asks me what's the minimum credit score for me to buy a house.
Well,
Like,
that's
really?
that
That's how we
mindset,
started the
though.
conversation?
That's the
Right.
mindset.
Yeah.
You gotta
Yeah.
change that, bro.
Yeah.
Right.
That's good, Ty. That's good.
I read all I need is a 550 to do this. Like, man, get the hell out of here. Like, get yourself credit here. Get yourself credit healthy so that way you can stop being a target. Like, these companies target you, whether you know it or not. It's marketing. So it's gonna, we know that I can put a trigger word out like no minimum credit score, no minimum money out of pocket. It's gonna make the black people flock to it because we don't want to do no damn work.
That's facts, man. Hey,
We
bro.
keeping it a buck today, right?
Oh yeah, we is.
Yeah,
That's facts, bro.
I love it.
Listen, man, I appreciate you coming on, man. I only got a few more minutes, man, but I appreciate you coming on. Legacy Home Loans, Ty Simon. I'm gonna have the QR code up there. But what's another way? Because sometimes when people look at the phone, the QR code's there and they can't scan it because they're looking at the phone that they were scanning with. So,
Right.
so what's another way they can get a hold of you, man?
Man, you can get at me on all my social platforms, man. It's T.Todd Simon on Facebook, Twitter, Instagram, LinkedIn, TikTok as well. So you can get at me on all the social platforms. You can DM as well. My email address is tsimon, TSIMON at myhomelegacy.com. You can always shoot me an email. I can respond. And you also you have the link to my calendar if you need to set up a consultation or something like that. It'll be in that QR code.
Sweet.
It's various ways to get us.
Yeah, Todd, listen, man. I want to try to have something at least maybe once a month to try to educate people. One from the credit, from just financing, what's going on in the market, how to maneuver in the market, all of that. Every at least once a month, man. Me, you, Chris,
It'd be an honor, my brother.
Me, you, and Chris, or whoever come on, and we just chop it up and just inform the people about really closing that gap and what it takes, the mentality, like you said, that was really good about the mentality. We come in, what's the minimum, instead of want to knock it out the park. We got to change that mentality, man. That was pretty good, man. I thank you for coming on, bro. Thank you for coming on.
Absolutely, bro.
And we gonna keep doing this, man.
Absolutely, bro. Once again, man, I feel like my assignment right now is to do this, right? Like I said, I've been in this thing for 21 years, man. So one of the crazy things, and I'll just kind of give this one little point. I know we got a few seconds.
Yeah.
One of the ways that I even got in the industry is by an Italian guy that was actually his name was John Sigonella, my partner. He was the mortgage guy in the branch. I was a small business guy, so I referred a lot, and we just kicked it. Slick back Italian guy, drove a little Porsche. We kicked it and ate lunch, and he was like, "Hey man, like you pretty good. Like you kind of better than me with this. You ever thought about doing it?" And I was like, "Nah, not really." And we just chopped it up. But once again, it was an introduction by somebody that did not necessarily look like you and I, that just saw the opportunity to speak. And I don't think he may not even remember it. I remember it because I was trying to figure out how to change it from the inside out anyway.
Mm-hmm.
You feel me? So that happens, and now you walk away. Now, 10, 15 years later, we're in this place. So
Mm-hmm.
I don't consider it robbery, but I think it's an assignment for us to get on the platform, like have conversations. I hope that we get actual feedback when we get this
Mm-hmm.
on social platform, where people might say something back, talk about a topic that they might want to hear us discuss. So that way we can make sure that we giving the real gems and the real meat to the people, so that
Mm-hmm.
way they can walk away informed, not us just talking about what we think they want to hear, but them telling us what they want to hear about, and then we just bring the smoke like that to them.
Yep. And on that
Okay.
note, thank y'all for watching, and God bless, man. T.Todd Simon, Legacy Home Loans, Chris Shaw, my boy Chris Shaw. Thank y'all. Black.
Absolutely.
All right.
Peace and blessings.
Peace.